Hello and welcome back to the ROI channel, the channel that's obsessed with the art and science of return on investment. And today, a quick video overview on one of our major holdings and one of which I am very, very bullish moving into the next bull phase of this secular bull market for oil. Talking, of course, about Cenovus Energy. It is a holding in the publicly available portfolio, and I'll leave a link in the description where you can check out the rest of the portfolio. So today, guys, talking about Cenovus, where we've been in the past and what my original investment thesis was back in 2021 and whether or not things have panned out as I expected. So we're currently up 50% on the position as the slide demonstrates. Disclaimer, obviously I'm not a financial advisor. I don't know your situation. Please do not mistake anything that you hear as financial advice. It's purely for educational and entertainment purposes. It's my opinion and it's what I'm doing. Okay, so it doesn't mean it's right, doesn't mean it's right for you. You need to seek the appropriate advice before making any investment decisions. So moving on into the important stuff. So let's take a look over the last year price action in terms of Cenovus Energy. Entry was, the average entry is 12.58. I'm using US dollars for the US listing because that's what's available on eToro, and that's where very liquid options market is as well. They do, being a Canadian domiciled company, they do also have a listing on the TSX. So as you can see, we've got in a great entry price, great valuation, and we saw moving into May and June, we really saw this squeeze coming in terms of oil plus refining margins getting up to about $180. And so obviously these companies are absolutely printing cash in those type of environments. Refining capacity is key for Cenovus because they're a fully integrated player since their merger with Husky. And I've spoken about this before, so I won't dwell on that, but to have the ability to have refining capacity as well as crude production and midstream is obviously key. We're hovering at around 18.89 as of the latest close. Here I've broken it down, and I just want to perhaps give some balance sheet considerations to the company. So where are we since January 2020 in terms of the market cap? You can see a huge upbeat there on the back of the share price. We've had some dilution in the shares, which will enable the company to essentially continue to do what they're doing. They're making good acquisitions, and so I'm not concerned about that. The allocation of capital has been very good. Net debt $9.92 billion on a market cap of $36 billion. If you look at price to book, we're calling it around twice the book value for a main player like Cenovus. That's neither particularly cheap nor is it particularly expensive. Cash and equivalents, 2.27 on the balance sheet. So they've got plenty to work with there. And their debt will be coming down, and they have announced already that a large amount of their free cash flow will go towards shareholder returns, be they dividends and or buybacks. Looking at more, I suppose, operational income and cash flow considerations. Here we've got an expected EV to EBITDA valuation for the next 12 months of less than 4. So you're getting slightly better than 25% yield. EBITDA, of course, being at the top of the line. So we would take that with a very large grain of salt. CapEx, 2.3 billion for a market cap of 36 billion. Free cash flow over the last 12 months, 4.36 billion. Okay, so you're putting 2.37 billion back into the business for cash flow and generating a very healthy return on that investment. And moving into the future, if you have been following a lot of guest speakers on the channel and presentations that I myself have done, talking about the oil market, we are expecting obviously a very high price environment moving out at least into 2026, 2027. So companies like Cenovus should do very, very well indeed. Free cash flow for the last quarter, so most recently 1.67. So if we're looking at, say, timesing that by 4, we might be getting up to, who knows, maybe tick over 6 billion on a market cap of 36, which is, for such a mega cap stock, that's pretty good with refining capacity. It's a hell of a lot better than what you're going to find in the tech space, put it that way. Okay, these are the slides I've taken from the last presentation. Let's see whether I was right or wrong, and let's see what may or may not have changed. So merger with Husky, I've mentioned. They break even most of their wells on average across the whole company is $36 WTI. So in an $86 oil environment, which we are in, and for reasons that I've mentioned in other videos, I believe that's where the floor price will be effectively set by a combination of OPEC and the US government's buying plans and production plans. We have well and truly struck through those yields. We've gone way over above the book value. So we're moving through there. Debt reduction program is in place. 50% of the free cash will go to dividend repurchases. They have already repurchased since I entered the position around about 7% of the float. So management have done a very good job there, funding growth via free cash flow. So tick, tick, tick. Cenovus is almost reaching their deleveraging target. That was initially back in 2021. And so now we are on the cusp of enjoying the fruits of some of these management decisions in terms of returning capital to shareholders. At the moment, I've just updated the yield there, 90% free cash flow yield on the market cap. It's very, very good. And of course, the company has the opportunity to buy back more shares and get a re-rating on the stock multiple, or they can start to increase dividend payouts in 2022. They've done both of those. Moving into a high oil price in 2023, I see no reason as to why that would not continue. This was a key tenet of the thesis originally, using a fairly conservative multiple of 6 times cash flows. There was more than 100% upside potential at $80 WTI. And so we saw Cenovus get well and truly past that in May and June. And so we did expect that at $80 WTI. And obviously you can see what happens as we start moving into those higher prices. $80 being the floor out into the future. I continue to see potentially another 100% upside from here on the bullish case. But given the free cash flow yield, there's certainly no reason that we would think about, or that I would think about exiting the position. So here was second presentation done on Cenovus versus the first, seeing how things are playing out. These are the projections coming into end of this year, start of 2023. And from a free cash flow perspective, we were pretty much bang on. I was off by about 20 cents in terms of the cash flow being produced and versus the current share price. So share price at 18.89. And so we're, definitely on the money there. Here, I have taken an excerpt from the legend that is Shubham Garg. If you haven't already checked out the podcast that I have done with him, it'll be out in 2 days' time. And so make sure that you check into that one. It is 2 hours worth of absolute gold in terms of information on the oil markets. So here, using the forward strip, we've still got a double-digit yield, which in most places around the world is hard to come by. And for the amount of inventory the company has and the economies of scale, that's obviously a super, super attractive investment thesis at strip prices. If we look into a higher oil price, which I expect, and a higher AECO price, which is the Canadian natural gas pricing instrument, we are expecting maybe a $40, somewhere around $100 WTI and $5.50 AECO. It gets us to pretty close to a $40 share price. Okay, so then we would have that 100% upside rating. And if we continue to move into this crazy scenario, which is certainly not out of the realms of possibility, Shubham here is a target price of upwards of $50 at 110 WTI and 575 AECO, and then 58.85 expected for an average of 120 and $6. So it's got to be the average. I certainly can see an environment where that happens. So that's not out of the realms of possibility whatsoever. If I take a more traditional approach, ignoring the fact that it's a commodity producer and simply using analyst expectations and running out some scenarios here, here's what you'll find I've done. I have taken these from analyst projections for free cash flow. Okay, so they're not mine, they're the analysts. And looking at what I think would be very, very conservative growth rates and an extremely conservative discount rate that is today's cost of capital. I fully expect with the company paying down the debt that cost of capital is going to go a hell of a lot lower, and that would re-rate the value of these cash flows to the upside, because obviously you'd be lowering your discount rate. So there's an argument to say that you might halve that discount rate, certainly. However, that being said, these are the probabilities that I've assigned to each of the base, the bull and the bear cases. And I have given the company no credit for share buybacks. I'm using the current share float here, and this is what we get. So using this particular model, and obviously you have to come up with your own assumptions as to whether that is or is not realistic, then we're looking at maybe an average case of $42 for the share price. If we want to apply a 2/3 margin of safety to that, then you're looking at 27.75 cents, which is obviously still a long way to go on the upside compared to where the stock is currently trading at 18.89. If we run it through more of an IRR filter, let's say, again, same discount rate as a weighted average cost of capital, and today's updated share price, updated cash flows on a per share basis, giving them no credit for share buybacks. So there's every reason to believe that on a per share basis, these cash flows will actually be better than what they are here, and that these ones are understated. However, be that as it may, here we've got a double-digit, very healthy IRR that should provide a comfortable return over a high inflationary environment that I expect moving forwards. So that's it, guys, basically for my update on Cenovus. It is about 8% of the portfolio at the moment, and I'm not looking to add unless we would get a drawdown in price, and I certainly would add some more. And I'm certainly not looking at selling. So Cenovus is a mainstay. It's my main mega cap play in the Canadian oil sector on eToro. My main play is actually Meg Energy, but that is not available on eToro because it only trades on the TSX. So that's it. If you like what I'm doing here, guys, you can join the ROI Club, where I put out some high-level, sophisticated trades, and you can literally see what I'm doing and copy it should you choose. And I also put out a monthly newsletter article / analysis on global macro, and then I always do a deep dive on one particular company. And so that is coming out at the end of this month. I do a month in review, and I look forward into the next month. We're talking a lot about OPEC's decision and what that means for the oil prices moving forward. And I go through a key point analysis on my favorite small cap a Canadian oil company that I think is trading at less than 2 times cash flow. And I think it could easily be a 5-bagger over the next 3 to 5 years for me. So that's what you get. One of the things you get access to. You get access to my master sheet of analyses, and you get access to all the different intelligence nodes and exclusive content. So if you're interested, guys, it works out to be $5 a month if you pay annually, and there's a free trial. So you can test it out. If you don't like it, you don't have to pay. And as I said, look, for $5 a month, honestly, it's not expensive. And everyone that has signed up so far, the paid members are really loving the content. So I hope to see you on the other side. And having said that, if you're interested in other ways of contacting me, I'm on Twitter. And so hit me up on Twitter, like and subscribe to the channel. And if you are interested in just having me do the work, you can copy the portfolio on eToro by using the link that I will leave in the description. That's all, guys. Take care, and I hope to see you in the next episode of the ROI channel.